The other day in one of my classes, I was talking about investing with my students, and they loved it. They were all excited about the S&P 500 and compound interest, but a question that I got repeatedly was, how do you actually get started? Not conceptually, like literally, how do you get started? What is a brokerage account? How do you start a brokerage account? How do you pick a brokerage account? What are the things that I should look for? What are the things that separate one from another? And so I decided to make this video for you so that you could learn as well. And just a quick side note, why are these platforms so confusing? It's been a while since I had built out my own brokerage account, and so I forgot how incredibly confusing these things are set up to be. And I think it's because what they want you to do is get a little confused and then have to call them so that somebody has to help you and then you pay them. But what I'm going to do is I'm going to teach you guys and go step by step and actually show you on the screen so that you could walk alongside with me. Because these things are not as user-friendly as they should be for 2021, but Professor G's got you. Hey everyone, my name's Nolan, my students call me Professor G, and it is my passion helping young people understand personal finance and the ins and outs of starting a business. Let's do this. So what is a brokerage account? Everybody throws this word around in finances like we're supposed to know what a brokerage account means. It sounds like a private club between the Wolf of Wall Street and somebody who has an offshore account in the Caymans. So a brokerage account is just basically an account that holds stocks or ETFs or bonds or whatever it is. It's just basically an investment account. And so when people say like I invest in the stock market or I have bonds or whatever, they basically have a brokerage account. Why should we even open a brokerage account? Obviously, we understand that compound interest is our best friend, and there's not really a wealth building machine like investing in stock. So you want to take advantage of that. Most of the time when we're talking about investing, we're talking about things like the 401k or IRA or whatever, and that's for investing for retirement. The reason why I suggest that you also have a brokerage account is because yes, you want to be set up during retirement age, and that's great to make sure that you are safe when you're 65 and above, but what about now? What about when you're 45? If you're like me, you don't want to wait till you're 65 or 70 to be able to go travel places or to be able to do fun things. Now, obviously, it's going to be very smart for you to delay gratification as much as you can and be able to invest as much long-term as possible. But I do believe that a portion of your portfolio needs to be something that you can access in 10 years rather than everything in like 40 years. When looking for brokerage accounts, the main thing to look for is fees. Fees will eat you up, even if it's a 1% fee here or 0.5% fee here. So now I don't absolutely love Robinhood and that platform just because it's so new and unproven yet, and it just seems like there's a new lawsuit or complaint every couple days, but we do need to stop and give them a round of applause because they were the company that came out and absolutely disrupted this industry. Before Robinhood, there was fees on everything, and it was so confusing. Even though it's confusing now, it was so much more confusing, and it really was like a small club of people who understood this, and they could take advantage of everybody else.
But you cannot declare offshore investment losses against future capital gains. Any child knows that.
I'll have to ask my accountant about that.
So after looking through different types of brokerages and looking at the fees to make sure it's either zero or very, very close to zero, like 0.04% or something crazy low, then at that point, it's just up to personal preference. There's not a big difference between like Fidelity and Vanguard or E-Trade and Charles Schwab. It really just has to do with, do you like the interface? Do you like the app? So after much research, my top three are Fidelity, E-Trade, and Charles Schwab, with Charles Schwab being my favorite. So since Charles Schwab is my favorite, I'm going to walk you guys through how to actually start your brokerage account and how to get it up and running. So what you're going to actually do is go to charlesschwab.com, and then when you get there, it's going to look something like this. So you're going to want to go to accounts or find something that says brokerage or open an account. To open an account, and then it really does take about 15 minutes or less. If you want to do retirement like IRAs and things, it's over there, but we want to do a brokerage account. In this brokerage account, it's going to be an individual account, and you just click apply now. So the things that you're going to need, will be right there. Social security number, address, blah, blah, blah. And then for about a million reasons, I'm not going to show you the personal information that I just typed in, but you type in all of your personal information, social security, the basic things. Whenever you're starting things with a bank or whatever, they need to make sure that you're a person and can do a background check. Next, it's going to take you to the next page and look through just basic details and things. I clicked here the salary or wages. Maybe you'll get money through gifts. Doesn't really matter. The purpose of the account should be just general investing. You don't really need to have anything more than that. Then in the next section, it's going to be optional features. And what I'd recommend is just not having anything else. I think you guys should just focus on the basics and just go with what I say in this video and my other videos. Just stick with the basics at first. And then for me, I like everything paperless because might as well save the earth while we're at it. Then you're just going to go through a bunch of different little things like terms and conditions and blah, blah, blah. Just make sure that you do read it. I had already read this before because I already have an account here, but I'm going through it quickly with you guys. So now that you have an opened brokerage account, fund that account. And let's just talk about what you're actually doing when you have a brokerage account. It's very similar to having a checking account or a savings account. You put money into this account, but when the money actually hits the account and it's actually in there, it's not doing anything. You have to go in and say, okay, now I'm going to buy this individual stock or I'm going to buy this ETF. And that's how you actually put the stock into the account. Other than that, it's just money in an account and it's not doing anything. When you open up the account, it's going to look something like this. As you can see, I have no money in this account because I just made it for you guys so that you could see. So let's start where you guys would start, which would be to actually put some money in. So up here where it says transfers and payments, you would click on that. And then this is the best way, online transfer, but we have different ways to do it. As you can see, it does take about 1 to 2 business days, so just know that. So you click online transfer, and then you're just going to set up an account. You probably want to do cash only, which just means that you're going to take cash from your bank and put it into this account. So you're going to make whatever your bank account is, say it's Chase or it's Bank of America or whatever, input that bank account into here, and then the to account is obviously this account that we just made. Then from there, you would just click continue, and then say you wanted to put $1,000 in, you would just say take 1,000 from this account, put 1,000 into this account, and click continue. Now let's just say that you do have money in and you want to go and just buy some type of stock. So we'd go up to trade here, and if you know what stock you're going to want to get, you would just click on trade stocks, and then if you know the symbol, then you go from there. So let's do an easy one like Apple, right? Apple Inc. And remember, there are other companies that have the word Apple in it, so make sure you know the exact ticker symbol that you're looking for. Well, we want Apple. We want to buy 1 share, and if you want 1 share, then you're just going to put a 1 in there. If you want 5 shares, then you put a 5 in there. The amount that the share is right here. And so for this one today, it's $149.71 to buy 1 share. So if we're going to buy 5 of them, it's going to be $750 or so. Let's just say we're buying 1. For the order type, you're usually just going to put it as a market order, which just means that you're going to buy it at the price that the market says it is at that time. You guys can learn what limit and stop limit and all of that is by going to this little question mark here, and then it tells you exactly what a limit order is and all of that, which is one of the main reasons I really like Charles Schwab, because they do have a lot of that kind of stuff around. So we'll just say it's a market order, and then from there you would click review order, and then obviously I don't have any money in my account, or else I would click place order, and then you would have that stock. Now an ETF that I always talk about is VOO, V-O-O, which tracks the S&P 500. So let's look at how we do that. So let's look at how we would do that. So we know that the symbol is VOO, V-O-O. We found it right here, Vanguard S&P 500 ETF. Click on that. Here we see that it costs $411 or so. So we want to buy 1 of those, market order, and then click review. And then obviously if we had some money, we'd click place order. and now you have that share of the S&P 500. So it works either way with stocks or ETFs or whatever, once you know which one you want to buy. So now, more often than not, you're actually not going to know exactly which one you want to buy. You're going to have to do some research to figure out what company you want, and at that point, then you'll know and you can keep rebuying and it's super easy. But when you're first figuring all this out and you're a beginner and you're watching my channel and you're subscribing to every single thing I do and you're liking my videos and you're commenting, one of the biggest reasons why I'm going to recommend Charles Schwab for you is because of the research that you get to do with it. And it's very easy and it's very detailed. So let me show you. So what you're going to do is, from this position here, you're going to go over to research. And now with this, we want to look at stocks. And what we can do here is we can just type in a name or a symbol. So let's just say we wanted to look up Apple. So first and foremost, it's going to show you things like the open and close, the range in the last 52 weeks, kind of where it's been all day. If we want to look at where it's been the last month, kind of up and down here for the last year, all over the place, 5 years. Obviously, trajectory has been pretty high, so you can look through all of that. You can start to look through things like earnings per share or what type of dividend they might have. The other types of things that I really like to look at is different types of equity ratings, like what does Charles Schwab say? They give them an A there. There's a whole bunch of different analyst reports and things, any type of news that possibly is happening with this. And then what I like to see too down here, they like to do a comparison. So they usually compare it to the S&P 500, which is something that I like to see. Let's see how this company's doing. So in the last 6 months, they're up 14%. And in the last year, they're up about 20%, which is obviously awesome. If you can get 20% on your money, that's great. Compared to the S&P 500, S&P 500 is up a little over 13.5%, but over the year, 31%. Another cool thing is different ETFs that hold this company. So if you watch my channel long enough, you'll see that I'm really big into ETFs or index funds or things that are going to limit your liability. And I want to make sure that you're diversified into a bunch of different companies because historically that's been the safest way to do it. But if you really believe in a company and you understand everything about it, then it's okay to do the individual company type stocks where there is a higher risk, but there could be a higher reward long term as well. So all that to say that there are so many different things that we could look at from the research. The US markets, international markets, we can see what's happening in the United Kingdom and Japan and Hong Kong, and we can just see different indexes and different things like that, and you can look through. If there's ever something that you're possibly thinking about, you can come here and you can really research it very well before making any decisions. So as you can see there, the Charles Schwab website is not exactly the most user-friendly. It's definitely not Gen Z approved, probably, but it is very safe. It's been around forever, and it's one of the ones that I would recommend because of the research and the other tools in it that really make it just that much better of a financial platform for sure. So as with anything finance related, stock related, investing, always do your homework. Don't ever take any single person's advice. Make sure that you're comfortable with whatever it is that you end up thinking about doing. Remember that I'm not a financial advisor. I'm just telling you what I do personally and what I'd recommend based off of the things that I see in my own life. I got 3 quick tips that is going to help you when you are picking stocks for your portfolio. Number 1 would be, just because a stock has gone up recently does not mean that it's going to continue to go up again. So just be careful with that. Number 2 would be hype or secrets or anything that you think that you just got the inside scoop on probably is not as inside scoop as you think, and it's already most likely priced into the market already. So don't just listen to Chad down the street. He's probably not helping you as much as you think he is. Also, seriously, what do you know, Chad? What do you even do? My 3rd tip would be for you to buy a stock in a company that you believe is going to be around for at least 10 years. That's why I like companies like Disney or Apple or Berkshire Hathaway. These type of companies have such a big competitive advantage over anybody in their market that it's hard to think that they're going to lose very much market share in the coming years. those are the type of companies that you really want to be a part of. All right, guys, I hope this has been a big help. Please let me know in the comment section what other types of questions you guys are thinking of. I'd love to help you guys out wherever I can, so please hit me with those questions down below and I'll get to answering them. Professor G, out.